So Kirsten is, of course, a very famous VC, budding pickleball player, as I discovered recently. and founder of course, of Forerunner Ventures, which is around 12 or 13 years old at this point and has $3 billion in money under management, which is pretty incredible. Has invested in a lot of really successful companies whose names you know, Jet.com, Bonobos. But of course, in her current portfolio, she's got a lot of other brands that are pretty remarkable and that you also know, including Chime, whose valuation is somewhere between $6 billion and $11 billion, if secondary trades are to be believed. We can talk about that. Oura, maker of the popular smart ring that looks like a sort of a chunky wedding band. And Farmer's Dog, a mail-order dog food subscription service that is reportedly now taking in more than $10 million in monthly profits after years of running at a loss. So there's so much to talk about. It's great to see you. Thank you again for having us here.
Thanks, Connie.
We've talked a little bit about the mayor coming later, and I thought maybe just as a starting point, we could talk about the fact that you've stayed here. A lot of firms pre-COVID had moved into the city. During the pandemic, many of them went back south or they went over the bridge to Marin. You've sort of remained steadfast. I'm just wondering why.
I am a native Northern Californian. I grew up in the Bay Area. I have lived my entire adult life in San Francisco. And it's home, but that's not why I'm here. I actually so many times have checked myself along the way saying, I don't want to be boring. I want to go have an adventure. I want to make sure I'm seeing the world. I should go move somewhere else. So then I think, where will I go? And you can run that exercise for fun and for vacation, but when you get down to all the things that are, I think, obviously your friends and your family are a big thing. But if you think about your career and you think about being inspired for your whole life, like there's no better place than San Francisco. And I think that, this is where people come to dream big and to put real energy and act behind it. And one of the amazing things is you can be a person that grew up here your whole life and have a whole group of friends that did not grow up here, that come from everywhere. So instead of going there, they come here. It's just a dynamic place, and I love the energy.
That's great. Well, my husband could be on the Chamber of Commerce, I think. Do you think that being here gives you an edge over other VCs?
I do. I think it's always given an edge. I think first and foremost, like there's an energy here, there's a belief system, there's a work ethic, there's an ambition component, and it feeds on each other, and that I don't think you can replace anywhere. And key to harnessing all the opportunity through that is people. The secret behind every amazing company, whether they start with 2 people and grow to 2,000 or 200,000, is the people. And I think that people that have that kind of dreamy ambition and the grit to deal with startups come here to do that. So,
and Kirsten, I also just wanted to talk to you about how you define Forerunner. So, I mentioned a lot of consumer brands right now. I know that you don't really think of Forerunner necessarily as a strictly consumer brand, or at least maybe certainly not exclusively or even primarily a D2C firm. So
certainly not.
Yeah. So tell us a little bit about how you think of Forerunner in 2025.
I think of Forerunner in 2025 a lot the way I thought about Forerunner at the very beginning. So our job and our opportunity and ambition was to come here and be excellent venture investors. And we have operated consistently for the last 13 years with the same framework, which is generational businesses get built at the intersection of 2 big tailwinds. Other things can be happening too, but we really look for big shifts in demand, and we look for big changes in technology and business models. And that was the founding framework, and it underpinned what we did in the early days, which was driven by mobile and social, that were really like the new technologies and the new opportunities that people were building into. And similarly, on the consumer side, they were discovering consumers were discovering a whole new way of interacting, discovering, sharing. And one point of intersection in that was changing landscape in commerce. But around that, there was a lot of other things happening that were supporting those businesses, and we've always been focused on that. And then it went out kind of circles from there.
Well, I want to talk to you. I know that one of your big areas of focus right now is sort of the intersection of AI plus consumer. But just to talk about D2C for just a second, because I do think your track record there is so remarkable considering how many brands we've seen, emerge over the last 15 or so years. And so, in addition to Bonobos and Jet.com, as I mentioned, you've had Warby Parker and Glossier, and you also have Farmer's Dog, which I think is really interesting. This is a company that's making dog food. And it's competing with at least a dozen other companies. But last year it raised a $200 million round at a $5.2 billion valuation, which is pretty massive. So what is the secret recipe? It can't be the dog food because dogs are not that picky.
Well, first of all, Farmer's Dog is an incredibly successful company, and my partner Yuri is on the board there, and she was the one that championed it from the very beginning, and saw the spark in Jonathan as a founder for that business. I think, Connie, like those businesses are all great examples of what I was articulating before. In that they were addressing a new demand, a new preference in this part, and related to that, those companies you mentioned, all consumers, largely in discretionary product categories, intersecting with new business models that were subscription businesses, that were online discovery, go to market, those things. And all those companies that you mentioned were started somewhere around 2010, before or after. That was really the first time those business models were ushering in a new way of doing business. And part of what we try to do in venture is to be early, is to see something that's percolating, that has enough relevance to today that you can get going and off the ground, but that is really moving in the path of momentum, and to be first. Because part of, I think, having success in venture is obviously having the outlier businesses, and one path to doing that is kind of being the category leader that sort of is able to capitalize on that positioning. And all those businesses started at that time. Lots of good businesses in consumer and consumer branded products have been built since then. We haven't invested in them because I think once we got this whole first generation, we moved on to what was next, what was tomorrow.
Yeah. So are you saying this company was just very early to the game? Or is it, because as you said, it's so crowded, digital ads cost, are so onerous at this point.
I mean, I think, let's go back into 10 years ago and 5,000 business plans later. I think what stood out to us at the time was pets was a huge trend. More and more people were waiting to have kids, were having pets. The spend on pets, and it's gone up since then, was already on the rise. We could see that trend happening. It was toys and treats and everything else. Food hadn't been innovated on. It was still bags on the shelf. And we met this entrepreneur who was really operating from a place of this is what he and his partner did for their dog. And he was effective in convincing us that he could do this at scale. And from a business model perspective, it was still new to be D2C. There was still efficiencies to really play into on the marketing side. And it was a subscription business, which sort of mapped to certain parts of scaling early that worked.
Right. So interesting. Another great bet of yours, Chime. Again, super crowded space. I don't know how Chime did it, but I will say its chief product officer.
Total grit and tenacity, like most startups.
Okay. Well, one interesting thing, its chief product officer talked to one of my colleagues, Marianne Azevedo, recently, and said that the user base is sort of not what I had imagined, which is people in their 30s, and that it skews mostly female. I don't know if that's just sort of happenstance or if that was part of the theme, or if you know how that came to pass.
I don't know that one of the things that I thought was really compelling about Chime early days and now was they're a very mission-driven business. They really felt like there was the bank, which every person needs, wasn't serving true needs for the consumers. In particular, they were honed in on this idea that banks don't do much for you and they charge you a lot, but everyone's got to have one. So can we do better? And can we do better for everybody? And so it was a very mass market approach. Particularly on the go-to-market. And I think that they came up with some strong messaging that was compelling. They came up with product that was compelling, that got people to start to bank with them. And then they've been superb at continuing to understand what does a user want and need, what product can we add to it. And as they've done that, they've grown the pie of not just the products they sell, but the people that they appeal to. And so with 8 million or so customers that they have now, I'm sure there's a lot of women and there's a lot of men in there.
So we all know in this room, valuations have been all over the place. There was sort of this valuation frenzy during the pandemic. In 2021, Chime was valued at $25 billion. I think last year maybe I'd read a report that was valued at $6 billion, more recently $11 billion. I just wonder how you feel about, as an investor, about these secondary pricing reports in the first place, and if you think that they are sort of, if that sort of determines the real value of these companies.
Connie, the secondary question is a big question, I think, outside of Chime, but just in general. I do think, just for a minute on the secondaries, companies are waiting so long to go public. Venture model is generally 10-year fund life cycles. And if the path that we're on now is that you need to be a double-digit billion-dollar company to be successful for an IPO or in the public markets, it takes some time to get there. And so, it's interesting what kind of purpose the secondary market can serve in terms of, continuing to drive the industry, to allow people to unlock returns and liquidity, to allow access to other people or other types of investors along the way. So in general, I think there's definitely a place for it in the market. In terms of the prices, if you think about it, the round that gets done, the Series D, that was a negotiation between the company and an investor.
Right, exactly.
Versus at the secondary market, you've got more people in the mix, right? And then when you go to the public markets, you've got everybody in the mix. So maybe it's part of the journey.
Mm-hmm. But the price discovery is real. I guess I also wondered, do you sometimes take advantage of those? Of course, did you invest in Chime Seed or Series A or both?
All of them.
All of them. Wow.
Well, no, all the early ones.
Okay.
We do early.
Will we see you on the S1? I know it's filed confidentially. Can't say. Do you buy more of your companies on the secondary market, or by the time they're trading there, you've got a big enough?
We are engaged in the secondary market, buying and selling.
Okay.
In general.
I also wanted to know a little bit about Oura, another huge company, another big valuation, another crowded space. This company is worth what? $5.2 billion per its small set of investors. But this, I just think this is another fascinating story. And this one, this company is sort of the same age as Chime, but the CEO said he doesn't want to go public anytime soon. I wondered what you thought of that. 12 or 13-year-old company.
How many founder CEOs do you sit down with to tell you they're running to go public? But sorry, Connie, what's the question?
No. I don't even know. I just wondered what you thought of that fact that he said explicitly like a month ago that they have no intention of going public anytime soon. Because I always think that must sort of hurt a little bit as a reader.
Well,
as an investor.
Here's what I will say about Oura. Our investment is maybe 5 or 6 years old at this point, but this is an off the charts phenomenal company. With a big vision that gets bigger as they continue to engage with their users and build out their team. Yeah. It is started with sleep, obviously, but the amount of data and information that they are getting through that, and the amount of different distribution channels that is resonating with, has been able to unlock a lot of opportunity, and it continues to do that. So I think they are excited about the places that they're going with their product and their offering, and that we are very excited about that too. So we haven't even gotten to the thought around our table about selling because we're like here for the growth that's happening right now.
Well, it also just has this hip factor. I mean, Jack Dorsey has worn one, Mark Zuckerberg. I had Mark Laurie at a Strictly VC event in November. Mark, who you know very well, founded Jet.com, now runs Wonder, a food restaurant delivery service. And he was twisting his ring around and he was talking about how it's tracking, his metabolic, this and that, and he's feeding all this information and it's sort of helping him to develop Wonder's products. But it really did sort of bring to mind the fact that this company is so squarely at that center of the Venn diagram, AI/machine learning plus consumer. So I just wondered, I guess, what else you're seeing in that space that's so interesting to you? Because, of course, people are very interested. You obviously have good taste in companies. What should we be tracking?
Thank you. Actually, the way I want to answer that question and the way we think about it right now is like, this is a really exciting time to be a builder. It's a really exciting time to be an investor. Gen AI is what we think of as a start of another tech cycle. We are 2 years maybe into it. We've got, a handful of years while it's still considered early. And so many things are up for reimagination and invention. And the way we're thinking about it is we went from 2D to 4D. Yeah. We skipped 3D in the middle. We went straight to 4D in terms of what's possible. And it's a dreamy moment. It's also what we think of as the messy creative stage. And we love it. Come here with your wild ideas. Let's try it out now. And so at the risk of sounding like I'm excited about everything, Connie, I think there is a world of opportunity out there. And just to maybe even back that up with a little context, ChatGPT is to this generation what Google was to the last. And let's just stick with consumer for a minute. If you think about going to Google, the white bar, you type something in, it's a utility. I use it all the time, but I also go to Zillow when I want to look for houses. I go to OpenTable when I want to book a restaurant. I go to Expedia or Kayak when I want to book hotel. All these big categories were built off of that original nugget that added other features that were appropriate and specific to their category, their business, what the mind space that user might be in. I want to see what people can do with AI in that regard.
That's so exciting. I know we have to wrap up here in just a second. I wanted to ask you quickly, speaking of AI, this is a recurring conversation I'm having with everybody. Is AI going to displace venture capital? Can founders do more with less, and will there be impacts eventually? I mean, it seems that's inevitable.
Okay, so it is very exciting for everybody, founders and investors, and I'll tell you why, that you can now have 5 people and get to tens of millions of revenue. By nature, this industry is a competitive, ambitious industry, and we love it when you can go further, faster. I think we're all here for that. So if you can go further, faster, and you could be a bigger breakout, and you could start to think about how you leverage the base of business that you've built to expand your product, to expand your addressable market, to think of new ways to kind of complement your existing business. That's how big platform companies get built. It will take money to build those businesses. So I don't think the kinds of ambitious companies that want to continue defining categories can be done without capital. It just might happen in different stages or ways. And then also, Connie, on the point of people and dollars, there was the last couple of years, people have really talked about headcount as a proxy for growth. And spending towards that. And yes, maybe we need less people, but you know what? We need GPUs. Right. Costs are just changing to other things. So if there's a great company with a great opportunity and a big ambition, there are things to spend on.
That's great. But it is interesting how that's been flipped on its head. Head count.
Yeah.
Thank you so much. Great to see you. And thank you again for hosting us.
Thank
really
you,
appreciate
Connie,
it. Thank you, everyone.